Hello everyone, K Kim here from the Traders Club to tradersclub.com. Today is April 12th. Market has been closed about an hour and a half here, and I do want to look at the market indices today. Interesting thing is happening here. We're going to talk about also, I want to talk about oil today and some gold, silver, and the miners. And first though, before we get into it, you can see that the market has been bullish today. You can see the Dow Jones up 0.94%, S&P 500 0.97, Nasdaq 0.80, Russell is 1.04% up, New York Stock Exchange 1.23. Semiconductor is actually minus 0.13 today though. Transport is 0.77% with the banks to about 1.26% gain today. Oil is about 4.46% gain also, and gold and silver and the miners also is doing pretty good here today. So let's get to it and look at these here quickly. First, I do want to talk about currently you're looking at 65, or currently you're looking at daily chart of S&P 500 Trust Spider, right? SPY, and something we've been talking about if you've been following me on my articles and videos, that it is the rising 50 MA is the one that we should be gauging our trade with and looking at the market here and kind of a reference point. And we've been talking about that, and if you've been following me, here's last time I wrote this article was on March 20th, 2016, right? So we talked about market indices sentiment with the rising 50. So basically what we've been talking about here is that, look at transportation average, we got New York Stock Exchange. They all been, what they've been doing is they've been all been respecting 50 MA since the kind of a early March, mid-February here. You can see the transport, again, this was written March 20th, and you can see New York Stock Exchange been respecting the rising 50 MA on the 65-minute chart, right? 65-minute chart. Same with the Russell 2000, financial sector as well. And obviously semiconductor here, Nasdaq, Dow Jones, and Spider. And at this time when Spider also cleared this resistance as well when I wrote this article. So going back to the chart here, you can see that since then we continue to march higher. Last couple weeks though, we've seen sideways movement, a lot of volatility here. So this is a reason why on my last few videos is that we shouldn't be so obsessive with just this exact point of the 50 MA, right? It's the reference point. It could go slightly below it or above it. What's important is the rising 50 MA. You can see that last time we were below the 65 minute. Again, this is a 65-minute chart, guys. Of 50 MA, we got below it here as well. Here we were trading kind of below it. We gotten much below the 50 MA, but you can see that as the 50 MA starts to decline or starts to flattening out, start to move sideways, what that means is possibly, right? The keyword is possibly, this minor term uptrend has shifted to neutral. That could possibly go to shift to bearish, right? Doesn't mean that it's bearish yet. When we start to move sideways like this, and when we start to see, a lot of volatility, you're gonna see a lot of gap downs, gap ups, traps, and head fakes. You're gonna see a lot of that. When the market starts to shake and bake, that doesn't mean that market is gonna fall over, though it can happen. It means that market is now possibly getting into shifting phase, possibly from the bullish sentiment to a neutral sentiment. So I would have to say in the minor term, looking at the Spider 65-minute chart, 50 MA, that 50 MA is starting to move sideways. We're at neutral at best. We're neutral. We're not bearish yet. Why? Why are we not bearish yet? Well, because what is the definition of an uptrend, right? Higher lows and higher highs. Do we still have that? Yes, as long as we continue to cultivate, the price action continues to cultivate higher lows and higher highs, the benefit of the doubt, I'm not going to say, mark my word, that it's going to go higher, but the benefit of the doubt as of today with the tangible data at hand, benefit of the doubt actually goes to the buyers. But again, the sentiment though, I would have to say we're neutral sentiment, neutral to possibly bullish for the fact that we cleared this resistance as of today. We're just kind of holding above that. But again, we're dealing with this volatile market. We've been dealing with this since late last week. And going into, or whole last week was pretty much volatile. And this week, going into this week, yesterday and today, pretty much volatile market. So, I mean, we could still just come right back inside of this downtrend resistance tomorrow, like gap down and see something like that. Is that possible? Yes. Because we're dealing with this volatile market we've been dealing with since last week. That's a possible. But again, with the tangible data that is at hand as of today, I have to say that the sentiment of the market is getting into a neutral to bullish territory. If we start to take out some of these resistance levels at about 206 level, 206.46, then I think after that we'll probably get up to about 207.13-ish, right? So I think the volatility will continue in the market. I think we'll continue to see a lot of heavy movement either to the upside or downside. This is where the minor term traders are very, very emotional, because obviously they are they've been getting a lot, they've been getting chopped here. You can see a lot of this as the 50 minutes start to flattening out. You can see how the market has just been moving and zigzagging all around. So I think there's still a lot of emotion involved in the minor terms. So I would have to say the volatility probably going to continue until we take out some of these resistance levels at 206 and 207-ish level there. So going back to daily chart though, something that we've been talking about on the video is that last time when the 10 EMA has been acting as a good support here and here. You see that 10 EMA on this daily chart, that blue line, and then right below it is a 20 EMA, kind of is it a light green or light blue? That light blue line, right? That was 20. I mean, last time we acted support was this time in February 24th, and we haven't touched it since until Thursday, Friday, and then Monday, and today you can see that we bounced off of it. So these moving averages are going to be quite helpful gauging the minor term. Once the 10 EMA gets blown out, you'll have to say, hey, that 20 possibly could be acting as support. As far as a candlestick sentiment is concerned, candlesticks possibly, looks like possibly bullish engulfing pattern, or might even be one white soldier. It's not clear at this point, but really though might be looking more and more like a bull flag type of pattern. Again, these patterns could form, but sometimes they fail to confirm, which means you want to see this thing confirming. You want to see this thing at least getting back above 206.95 on the spider, and then if we can do that, then we could say, hey, that bull flag has confirmed. However, if we do confirm bull flag and continue higher on the spider, we would have to say that this pretty prominent resistance coming down, this resistance, this is something that we've been talking about pretty much whole year if you've been following me. And this is the demon, right, for the spider. If spider wants to get out of this environment, this fearful, emotional, dire situation, we must first, the buyers must conquer this level, because obviously last couple times when the buyers really tried hard to break above it, they failed, and when they failed miserably, and bears took advantage of that and brought it down quickly. As you can see, this was back in August, and this was also late January and February here this year, right? So does the buyers understand this? Does the buyers remember this? Of course they do. Bears remember this. Buyers remember this. You and I remember extreme measures. Remember when we're super happy. Remember when we're super depressed, right? So market remember this, right? People remember this. Traders remember this. Investors remember this. So I think once we get to this level, it'll be very interesting how this market is going to deal with that vicinities, with that resistance. Are we going to see another just tankage? Or this time, the buyer's going to come stronger than ever before, right? And then just break above it. let me tell you, nobody knows the answer to that question. The best way to observe is look at your price action, look at your levels, and see how he deals with that level. And like I've been saying, you know, I will follow with you guys once we get to close that level, right? But as of today, I would have to say, for the fact that it looks like we're bouncing off of that 20 MA on the daily chart, you know, the benefit of the Dow continues to go to the buyers until we see a clear signal that it has been reversed. Again, I'm talking about minor term here, right? This minor to intermediate term sentiment there. So I think again 206.95 is going to be important resistance, and then this coming down here. So I think, you know, to be honest with you guys though, 211, 206, right? This level, watch out this level, because this is a level where you're going to see a lot of traps, a lot of head fakes. You're going to see a lot of volatility, because if Spider get above 211.36, anywhere above 211.36 on the Spider, and please don't like, oh my god, okay, we just got above 211.37. Does that mean the market has completely reversed? Please. When I say 211.36, it's the vicinity, it's the area, right? So if we can able to kind of get well above 211.36 and hold above it at least a week, because we're dealing with kind of a dire level here, I think there's a good chance that market will completely reverse and even make new all-time highs. And we talked about, you know, I talked about that in my last video. If you haven't watched it, this was again, I published this video back in March 30th. Stock market ready to make new all-time highs with the question mark. So, you know, if you haven't watched it, go ahead and watch that. And something that I talked about on this video, I think the important chart of that day, and it's still valid today, and I'll go back to look at it, is the Dow Jones Industrial Average. Again, we're looking at diamond, not the index itself, but the diamond here. You can see Spider's still below this resistance level. However, back in March 30th, what happened was on the Dow Jones, it actually got above this resistance. But you know, I'm gonna practice what I preach. So I'm not gonna say, oh my god, we got just above this resistance, therefore it's gonna continue higher. No, we could see either breakout or head fake. We don't know that yet. So let's see what happened today. Let's see where we're at. Again, this was what? How long ago was this? Like, you know, 2 weeks ago, right? So let's see what happened today after that incident, or after that breakout. So you can see right there, right? Here, let me actually took a picture. There you go, screenshot it. It's just easier to look at without all the lines here. So looking at, this is today. So you know, I was just showing you the March 30th chart versus this is today. So you can see I put these arrows so you see clearly that that's a pivot level. If you don't know what pivot means it was a resistance or support in the past. Now it's becoming either new resistance, new support. So resistance meaning, you know, it's a resistance, it's hard to get above that, and then support meaning it's a support, you know, it hits that, it gets back up. Pivot meaning it was a resistance before or support, but it's now becoming support or resistance. Do you understand? So, and a lot of times there's a retest. You know, a lot of times when you see a breakout like this is what we talked about, you see a retest. I think there's I think the big reason why but Spider, S&P 500 bounced today, because it looked like it was going to fall over from yesterday's move, but I think we bounced up today. I think the reason of that, I think, is because where the Dow Jones was at, where the Dow Jones was retesting this pivot, retesting this old resistance as a new support. So you can see that I annotated with this arrow with green arrow saying that that's a support, old resistance becoming new support, and you can see that we actually bounced back up here. So again, it's again too early. It's too early to say that it's a breakout confirm and then it's gonna continue higher when I reach, you know, new all-time highs. It's a little bit early to say. It does look like we might have some kind of a bull flag type of pattern. But what did I just say on the Spider? Right? We can form, but we need to see confirmation. If we can see a follow through this week like this, there's a good chance that Dow Jones is ready to break out with the next resistance about 180, and after that is about 183 or 4 or so. So I think Spider's still below this this downtrend resistance, but Dow Jones is now getting back above and holding above, because we held above this level for how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 2 weeks worth that we held above this pivot, and that favors the buyers. So again, as of today, you know, benefit of doubt goes to buyers with the tangible data is at hand in the minor term. So I think it will be important to see if this bull flag is going to happen. Are we going to see bull flag happening and continuing higher? Again, we are dealing with volatile market. It means that we could see you know, another, you know, like gap shenanigan, gap down, and then just getting below it. Is it possible that we could see a move like this tomorrow? Just gap down and then just sell off, and this can come right back. You know what I'm saying? That kind of stuff. This is the reason why we can't just call things. We have to see what the you know, the information we get from the data, and then do our assessment according to the data is at hand. Not the data is not there. It's not just, don't play with your guesswork, right? Don't think that, you know, certain things can happen because of your fear or your emotion, right? It's the tangible data that is going to be important there. So obviously this resistance or this pivot is a very important level to watch. I highly suggest that you continue to watch this level. Again, also look at every single indices on your 65-minute chart or hourly chart, and look at your 50 MA or 50 SMA there and see how they relate to current sentiment there. What another thing? So that's kind of what I was talking about, is that, you know, if this was the last video, April 6th, 2016, that was what, like last week there, last Wednesday, I think the Dow Jones Industrial and Nasdaq showing relative strength, because at this time Dow Jones Industrial was actually holding above that pivot there, while the spider was still below that level. So I think my assessment as of today, I think with today's move, I think in the minor term, it definitely favors the buyers. But again, as we're dealing with a volatile market, I think that may continue. And for this bull flag, we need to see a confirmation. If you can see a confirmation to the upside, there's a good chance, I think, Diamond even feeling this gap here and getting back above 180, 119 upon confirmation of that bull flag, right? So let's go from there. I do want to talk about oil real quick. Somebody asked me a question on oil but I don't know, like last week or weeks ago, and asked me how I think about oil. And I talked about, I told them that it looks like possible you have this kind of falling wedge pattern. A lot of times this falling wedge can be seen as a bullish reversal pattern, but again, you need to see confirmation of that. I think again, we are breaking above this falling wedge, but I mean, so many people just quickly, come to a conclusion that that's a reversal. Like we're gonna get into a bullish trend at this point for years to come. That's not true. That's not true. Many times, we still have a 200 SMA coming down here. So we can get up here and we can fall right back in and do something like that, and we can have just kind of a larger channel type of resistance. Like let's say if this thing goes up here to 200 SMA and then falls back. All you do is I've seen this so many times where you just rearrange, let's say this goes, rearrange this resistance a little bit, and then now we're back in this channel type of downtrend, and then it just continue on, right? So this is a reason why, when you're using technical analysis for your trades and investments, we should not so quickly get into a conclusion, especially when you're calling major bottom, like a major reverse. It's not enough. It's not enough. You might ask me, well, when is enough, Kay? Well, you know what though? It's tough to say. I want to see at least it's taking out $8, right? $8.50. So at least I want to see a cultivation high. We don't even have into primary them higher lows and higher highs yet. So it's a good sign. They were like poking out a little bit on that oil chart on this falling wedge, but I just want to say it's not enough. Unless you just want to day trade it or swing trade it for a couple of weeks or so, but you want to go long term, like this is a bottom to the bottom where we're gonna majorly reversed. It's not, as of today, benefit Dow in the primary term still goes to sellers. And so I really don't think that this is, we don't have critical data to confirm that the oil has bottomed or reversed. I have to say that it's just not ready yet. I do want to look at Treasury bond here real quick. Treasury bond's been pretty progressive in my opinion, but and you know, with the cultivation of higher lows and higher highs, but it's just been struggling to get up here. We kind of threw that lower high now, so we're just kind of in the middle of nowhere, I think, in my opinion, though we do have what it appears to be a possible cultivation of a primary term uptrend with the higher lows and higher highs. So I would have to say, like, a primary term, we have this uptrend type of sentiment there. Intermediate term, I think bullish is the sentiment. Like a minor term, intermediate to minor term, we're kind of moving sideways. I think that's kind of what it's doing. The 50 MA, though, it did act as strong support back in March, mid-March. So if this thing started to pull back, that's the level to watch, is a 50 MA there. Let's look at dollars. There's a lot of talk on a dollar now. There's a lot of these weird YouTube videos saying the dollar's gonna collapse like by May 28th or something. You know what? I just it's so stupid. If somebody's calling a date like, you know, May 28th, like Ron Paul is doing it, and everybody else is making these stupid YouTube videos saying that that's what's gonna happen on May 28th. The dollar's gonna collapse, and you know, and then the whole thing is gonna just go to nothing. How does how does this guys know? Like, how does it guys know down to a date? And if anybody buys it, I mean, if it happens, all right, well, hey, they called it, man. I don't know, they're stock god. I mean, they're psychics. They just knew down to a day that May 28th, like, the dollars is just gonna become, like, you know, obsolete, and it's just gonna crash. It's just crazy to me how these people just come up with stuff like that, I think. But you know, vulnerable people, you know, they would take heed to that because they're very desperate and they need some killer information to just completely change their investment or completely change their portfolio, because they've been losing so much. They need, and if somebody's putting out things like that for free on YouTube, I mean, you really gotta, like, and I'm sure they're trying to sell something with it, like, well, there's information, May 28th, the dollar's gonna collapse, so, you know, if you do this, then I'll give you some more information. But technically, though, we are in a dire situation. Possibly we have this kind of a potentially topping pattern here, almost more like I think it's a phase type of, you know, what is it? The stage, if you study stage analysis, you know, they call stage 1, stage 2, stage 3, possibly stage 4. So stage 3 and 1 is a bottoming stage. This is a topping stage. With that, we don't have a confirmation yet, though. So once we get below that level, there's a good chance that, you know, we could see continuing to follow this downtrend fashion. But again, as of today, we are just holding this level. And you know what, though? We do have this topping pattern that is very concerning without the confirmation. There's a good chance that we could even see another, like, you know, rally before falling over, or, you know, we're not, you know, again, as of today, I'm not sure how it's going to play out. We do have a minor term lower highs and lower lows there. So there's a good chance that if we do have a confirmation on the dollars, this is a UUP or dollar index, and there's a good chance that some of these level can be next level support, like 23 or so. If we do a Fibonacci here, like this, some of the Fibonacci retracement zone is this level right here. So this, anywhere this vicinity where I just drawn rectangle there, is potential support level as a per Fibonacci retracement. Some of those level to watch there. Let's go to miners, gold, and silver here. I did write an article the other day or a few weeks ago, the miners and metals falling downtrend channel, and we are breaking above it, and we're breaking above it pretty hard here. You can see we are getting above it. To me, though, I still don't think that qualifies to, you know, to confirm that we have a major bottoming type of action. I mean, we have, looking at the, like, a weekly chart, monthly, there is certain data that could possibly signaling that this might be bottom. But as far as the, you know, like a confirmation is concerned, we're technically still on a downtrend. and we're getting into this resistance right now, here and here. So I'm not saying that we're gonna fall right back inside, but what if this thing just was a massive bull trap before this thing do something like that? Because, you know, don't you think that people were looking at this before? Like that? Here, I'll make it like this. Okay. And again, I'm just giving you a possibility. I'm not saying that that's what's gonna happen. Don't you think some people are looking at like this? This was back in July. So resistance, a breakout. Oh my goodness. This was 2014, July 10th. A breakout. We just broke out of resistance, okay? I mean, that's done deal. We're gonna like reverse for sure, just because we've gotten above the resistance, man. That's, yeah, I'm gonna put my mortgage this, and it's gonna go to like, you know, tenfold. I'm gonna make, you know, I'm gonna become a millionaire in like a year. And then, you know, it was, and then we stayed and we tried. I mean, this is what I'm talking about. This thing tried and became that just bull trap and miserably failed and got right back inside the channel. And then what do we have to do after that? Well, we just had to readjust. So this is what I mean by the adjust. Just have to adjust a little bit like this. So today, here, okay, this time, man, it's for real. It's, man, I'm betting my farm because we are above the this downtrend. Because, you know, this time, okay, because downtrend's been, you know, cultivating for a long time. And because of that, this is a legit breakout. It's a legit breakout. No, I don't know. We can't conclude that yet as of today. We can't. There's a video that I did. Yeah, so there's a video that I've done. There you go. This was back in March 2nd, 2016, just about a month and a half ago. There, gold, silver, and miners. Gold, silver, and the miners. When you should start investing. Okay, I didn't say when you start day trading. When you should start swing trading. When you start investing. We're talking long term here. So I did this video there, comprehensive technical analysis. I think I spent. I spent a good 30 minutes analyzing the gold, miners, and silver. Just when would you know that this market has completely reversed, not just guessing that it hasn't been reversed like here, but when has it been completely reversed and when you can start investing. So you can go ahead and check that out. Let's look at gold. Gold is actually, GDX has broken above that, but gold hasn't. GLD, we're still below it. So we're kind of still in this downtrend, falling channel. We're still bound by it, really, the gold, right? GDX was fell, you know. So that's another sign that it is not ready yet. Even gold has not yet gotten above it. Even if it gets above that level and just getting above that for a little bit, for a couple of days, even a few weeks, doesn't mean that it's ready to reverse. Again, I on that video that I told you about, on that video when you should start investing on gold, silver, and the miners, I did talk about weekly and monthly chart, a possible signal that this might be bottoming, but we don't have the price action to confirm that it has indeed bottomed. Right, we have a signals, quote unquote signal. These are the things a lot of people miss because so many people put so much emphasis on signals. There will be so many signals and these signals can fail. We need to substantiate those signals from the price action. Price action is always the king, right? So looking at gold here, the sentiment is still bearish. I mean, despite the fact that GDX has gone above it or breaking above it, appears to be so, but you know, we're still below it. And so even if it gets above it a little bit, next level resistance right here. So that's the level to watch. And then there's another resistance here. So again, with, you know, what you want to see is really a primary term lower highs and lower lows. So we have kind of a lower highs and lower lows going. So what does that mean? What is the definition of a downtrend? Lower lows and lower highs. So as of today, you know, looking at a primary term, really, benefit Dow goes to sellers. I mean, the minor term to intermediate term, obviously, you know, we've been in this uptrend which we've seen in the past. So it's not it can't be trusted at this time, right? It can be trusted until we see a solid cultivation. Again, in that video, I talk about when you should start seeing that this market has completely reversed. Go to silver here. Silver, we're slightly breaking out here, like GDX. So that could be a good sign, right? That could be a good sign. But again, it's one of those things where people be doing something like this. And I just gotta do this for you guys, just make it realistic so you guys know what I'm talking about. I'm just giving you possibility. I'm not saying that's what's gonna happen. Like that. So this was when. Okay, so we got this going on. We got this going on. This was back in June 30th, 2014. This is like a kind of a symmetrical triangle. Yes. Okay, we're gonna break out. I'm gonna bet my entire retirement savings into this, and we're gonna tenfold, right? And then and then very miserably we did. And am I saying that that's exactly what's gonna happen to? No, because nobody knows. Just keep that in mind, is that kind of shenanigan can happen. Yeah, we're like doing this, but if this thing start falling over, I mean, that can be very ugly. So I think, again, it's not ready. If you've been anxious to go long, and there are signals I see, like on my other screens, I see like monthly chart, weekly chart. There's certain signals that could possibly signal this might be bottom, but again, I need to see the substantiation from the price action before I want to start getting involved in this market here. So again, that is not enough for me, shouldn't be for you, for investing. You want to day trade it, swing trade it, go ahead. You want to invest this, you want to hold this for a while, you really think the gold and silver has bottom, and you want to hold this and ride this for years, and then you just want to retire on this. Not right now. Not right now. Again, watch the video. I talk about when to possibly do that. And as I start to see certain substantiation from the price action on this market, I will maybe part 2 or volume 2 on when you should start investing. Until then, I think I'll still stay away, unless you just want to do a quick, kind of more of a quicker trade there. You know what? I feel like looking at Apple. So let's look at Apple here, and then I'll look at Tesla, and then we'll call it a day. Apple, I expanded this resistance a little bit, or just adjusted a little bit. I know last time what I was trying to do was I did it like this. That also kind of does make sense though, because I want to try to get this resistance and that little tail there. So there's two things can be said at this point. Remember we just talked about on the Dow Jones where all resistance becoming new support? If I do it this way, you could say that, well, that is possibly becoming a new support, okay? Just like you said on the Dow Jones, that all resistance possibly becoming to new support. And maybe that's what it's been doing, and that's what we're seeing, that, that little bit of bullish spark today. However, the 200 SMA coming down, that has acted as a resistance here. This was back in April 4th. So if I can just adjust this a little bit and then put my resistance this way, we could still say that we're below the resistance. We're below the resistance. But right now looks a lot like bull pennant pattern. What is bull pennant? Is a bullish pattern. This pattern needs to be confirmed. What does that mean? Is that it needs to break out before we can say that it has been confirmed. We have a signal. We have bullish continuation pattern that could possibly give us back to about 123. But as of today, we don't have the confirmation yet. So if we break above 111.34, and if we stay above 111.34, okay, the key point is staying above, just getting, like, let's just say one day we stay up, and the next day we just fall right back down. You see, this market loves to do stuff like this. So this is the reason why I always say key point is we need to stay up and hold above 111.34. Again, don't come to me and say, okay, we're trading at 111.35, okay, that means it has been reversed. No. We need to stay above 111.34 to be safe. Maybe 3 trading days to like a week. If we can do that, I think there's a good chance we'll come up here and fill this gap, even get to about 123.32. We do have earnings coming up, I think, in April 25th. Historically, Apple tends to move sideways before earnings. That's kind of what it does here. Like, I mean, you can see that this was earning day, and then what happened before the earnings? Sideways. This was the earning day, a few weeks before, kind of moved sideways there. This was earnings day. What did it do for months? Sideways. And this was earnings day. What did it do for months? Sideways. There are a few occasions where before the earnings day, Apple did move up higher. A few occasions, but more often than not, it tends to move sideways before the earnings. So it could move sideways, but I think there's so many speculation upon this resistance. So I think if we break out of this, there could be just so many people just flocking in and just bring this thing back up here very, very fast, at least to about 120. But I don't think it's gonna go any higher than 120, at least anywhere higher than 120 before the earnings, right? So I think there's a good chance we'll get up here before the earnings and then see how the investors react to the earnings result will be important there. As far as the minor term sentiment is concerned, we talked about if you've been following my video, talked about just keep following your 65-minute chart, 50 MA on Apple, and as long as they stay above it, the sentiment is bullish. As long as we stay above that, the sentiment is bullish. In the minor term, you can see how we continue to stay above that 65-minute chart. All these oscillators are giving us that bullish sentiment, right? Bullish sentiment there. So that's a good sign, at least in the minor term. But again, this is a demon to conquer for the buyers. We conquer this, there's a good chance we'll get to about 120, at least 120, 123 there. Lastly, Tesla, and I'll let you guys go. Tesla just saw this V-shaped move higher after the announcement of Model 3. In my opinion, Model 3 is such a smart idea to make cars affordable. I love that idea about, Elon Musk, and he doesn't want to be known as this high-end brand, but he want to also target those, more of a middle class type of, consumers. And I love that kind of a passion from Elon Musk, and, he wants to serve the consumers, not just like, oh, I'm a big, this big shot, and my company is high brand, and only rich people can afford my car because that's who I am, who we are. I don't like that kind of, when people have that kind of arrogant, speech, arrogant mindset. I love the fact that he wants to serve, and to help the more of a, less fortunate consumers. And I think with that, with that news, I think Tesla came out of, technically speaking, where this was very, very dire situation right here. I mean, you could see a monstrous head and shoulder pattern there. I mean, if this would have gotten rejected here on this downtrend resistance, and that would have been lower high, lower highs, we would have been seeing at least coming down to about 120. We break that, and we could have seen this huge crash. However, with that announcement, and people like what they heard, what they saw, and was it like last time I heard was 250,000 people already paying $1,000 deposit to receive Tesla Model 3 next year, end of next year. They're gonna wait like a year and a half and just give $1,000 to Tesla just so they can reserve another spot. So anyway, enough of that. But technically speaking, though, we can see that we cleared this resistance. Last time I talked about how do you want to see this happening. You want to see this in making equal lows, creating possibly that inverted head and shoulder type of pattern. We do have a higher lows, higher highs trend going here, and that 10 EMA is acting as support here, that it acts as support. So if we lose 10 EMA, just like we looked at on Spider, next level supports 20 EMA. If we lose that 20 EMA, watch 50 EMA, right? So, but we have to understand that, as far as the probability of this thing continuing higher, though anything can happen, but you can see if you just look at a historical perspective, you get these kind of moves a pretty sizable pullback is inevitable, right? Doesn't mean nothing is inevitable in the market. I mean, market is going to do what it's going to do, but as far as the probability is concerned, after this kind of move, I really don't know if I want to go long here, at least for, unless I want to like day trade or just couple day swing trade. But if I want to like really milk this thing for the next, like it's 3 to 6 months, that's definitely not a level to go long. I want to see kind of a more of a steeper pullback, something like this, or something like that, or something like this. I don't know if you're gonna see a move like this. I think if we see a pullback from this point on, maybe something like that, maybe that's maybe a 38.2% retracement. If I just do something like this, so yeah, maybe kind of close to the 38.2 or 50% retracement. I think I feel more comfortable if I want to position trade, like hold this thing for 3 to 6 months. What I like to see, doesn't mean, I'm not saying that's what's going to happen. What I like to see would be, maybe a pullback to about, 221, maybe even 206, at least to retest that 50 MA right here. So in this vicinity, if he pulls back in that vicinity, I think it's a better chance to hold things much longer. But yeah, so I think that's kind of, I'm not on Tesla right now, and I want to see a kind of a bigger pullback, and then I think maybe then I'll be ready to go long then. But again, I also need to see where the whole market is going as a whole before I can get into any new entry there. So that's my analysis. Thank you very much for your support and following me on StockTwits and Twitter and on my blog. If you have any questions, you can always feel free to ask through my Twitter or StockTwits or my blog. If you like this video, please subscribe to my YouTube channel. And hope you guys have a great weekend. And I'll talk to great week. And I'll follow up with you guys again, maybe end of this week or next week. And I'll look at some of these like oil and the equity market and the dollar and the miners and precious metals and some of these again. And kind of follow up with you guys again. Have a great night.